Imagine it's a quiet Saturday morning. You've made this payment hundreds of times before. Same bank account, same amount, same routine. This month is different. You log into your banking app, schedule the mortgage payment, and hit confirm. A few seconds later, a notification appears. Mortgage balance, $0. Loan paid in full. You stare at the screen for a moment. After years of payments, sacrifices, and planning, you've finally done it. And strangely, nothing happens. The coffee still tastes the same. The weather outside hasn't changed. Your phone keeps buzzing with the usual notifications. Life looks exactly like it did yesterday. But over the next few days, something subtle begins to shift. Not in your bank account, not in your house, in your mind. Today we're exploring what really happens after you pay off your mortgage. Not the paperwork, not the financial calculations, but the changes most homeowners never expect. The shifts in freedom, decision-making, stress, and opportunity that can completely alter the next chapter of your life. Welcome back to Sam Invests. I'm Sam, and on this channel, we explore the psychology of money, financial freedom, and the decisions that shape long-term wealth. This isn't financial advice. It's simply an observation of what happens when one of life's biggest financial obligations finally disappears. Let's begin. For most Americans, a mortgage is the largest monthly bill they'll ever have. Month after month, year after year. The payment becomes so normal that it almost feels like part of your identity. You don't think about it, you simply work around it. Your budget revolves around it, your career decisions revolve around it, your financial safety net revolves around it. And because you've carried that responsibility for so long, you stop noticing the weight. It becomes part of everyday life. That's why the moment it's gone often feels surprisingly quiet. People expect fireworks. What they get is relief. A calm, steady relief that grows stronger over time. Because the biggest change isn't emotional, it's structural. Suddenly, your monthly obligations shrink. If your mortgage payment was $2,000 per month, that's $24,000 a year, no longer committed before the month even begins. Think about what that really means. Your financial floor just moved lower. The amount of money required to maintain your lifestyle has dropped significantly. And when your financial floor drops, your options increase. A rough month at work becomes less threatening. Unexpected expenses become easier to absorb. Career decisions become less driven by fear. The pressure doesn't disappear completely, but it decreases. And that reduction in pressure creates something incredibly valuable. Breathing room. Most people spend years chasing higher income. What they often underestimate is the power of reducing mandatory expenses. The effect can feel almost the same. But here's where many homeowners make a critical mistake. The mortgage payment disappears. The extra cash becomes available. And almost immediately, new spending arrives to claim it. Maybe it's the kitchen renovation you've postponed for years. Maybe it's a newer SUV. Maybe it's more vacations, subscriptions, memberships, upgrades, and conveniences. None of these are necessarily bad decisions. The problem is that spending naturally expands to fill available space. Give most people an extra $2,000 a month, and life quickly finds a way to absorb it. Before long, the breathing room that was created by paying off the mortgage quietly disappears. Different expenses, same pressure. This is why the period immediately after mortgage payoff is so important. The homeowners who experience the biggest long-term transformation are often the ones who create a plan before the payment disappears. Instead of asking, "What can I spend this money on?" they ask, "What can this money build?" A monthly mortgage payment redirected into investments can become one of the most powerful wealth-building tools available. Not because income increased, but because a major obligation ended. And that brings us to a change very few people talk about. Work. As long as a mortgage exists, there is an invisible chain connecting your house to your paycheck. The payment requires income. Income requires employment. Employment requires continuing to show up. Most people don't consciously think about this connection, but they feel it, especially during stressful periods at work. A difficult manager, an exhausting commute, a job that's become more draining than rewarding. The mortgage doesn't force you to stay, but it certainly influences the decision. Once the mortgage disappears, something interesting happens. The relationship with work often changes. Not because the job changes, because your dependence on it changes. You may discover that you genuinely enjoy what you do, or you may realize you've been tolerating circumstances that no longer make sense. Either way, you're making decisions from a different position. A stronger position, one with more choice, and choice has tremendous value. Financial freedom is rarely about never working again. For most people, it's about having the ability to work because they want to, not because they have no alternative. But there is another reality that deserves attention. A paid-off house can create a false sense of security. Imagine owning a home worth $600,000 outright. No mortgage, no debt against the property. That sounds incredibly secure, and in many ways, it is. But if your savings account contains only a few $1,000s, you may still face significant financial vulnerability. Your house cannot easily pay medical bills. It cannot replace lost income. It cannot cover emergencies without being sold, refinanced, or borrowed against. This is why a mortgage payoff should never be viewed as the final destination. It's a milestone, an important one, but still a milestone. The strongest financial position isn't simply owning a home free and clear. It's owning a home while also building liquid assets, investments, and multiple layers of financial resilience. The mortgage creates the foundation. What you build afterward determines the structure. Perhaps the biggest change, though, is psychological. Debt has a presence, even when it's manageable, even when you're comfortably making payments. It's there, in the background, influencing decisions, limiting flexibility, occupying mental space. When that obligation finally disappears, many people describe an unexpected feeling. Not excitement, not celebration. Confidence. A quiet confidence. The confidence that comes from knowing your shelter is secure. The confidence that comes from needing less. The confidence that comes from having more control over your future. And control is one of the most underrated forms of wealth. Because once you gain control, your questions begin to change. Instead of asking, "What can I afford?" you start asking, "What do I actually want?" That's a completely different conversation, and often a much more meaningful one. Of course, not everyone benefits equally from paying off a mortgage. Some people replace one obligation with another. The payment disappears, the lifestyle expands, the financial pressure returns, wearing a different outfit. 5 years later, nothing has really changed except where the money goes. That's why paying off a mortgage isn't a finish line. It's a fork in the road. One path leads toward greater flexibility, stronger investments, and increasing freedom. The other leads toward larger expenses and new forms of dependence. The mortgage payoff doesn't choose the path. You do. The homeowners who thrive after paying off their homes usually describe life in surprisingly simple terms. They sleep a little better. They worry a little less. They make decisions with more patience. They invest consistently. They create options. From the outside, it doesn't look dramatic. But internally, everything feels different. Because the greatest benefit of a paid-off house isn't the house itself. It's the freedom that grows from what you do next. The mortgage wasn't the finish line. It was the foundation. And sometimes, the most important chapter begins after the debt is gone. If you enjoyed this discussion, subscribe to Sam Invests for more insights on wealth, financial psychology, and building a life with greater freedom.